What is up, everyone? So today I want to talk about what I think will be the best investment opportunity of 2018. And it's not so much a particular stock that I am looking at, it's more of a sector as a whole that I think is going to outperform in not only 2018 but 2019 and 2020. And that sector is energy and oil and gas. And this is a sector that has been beat up for the past 3-4 years. I think starting in 2015 is when oil really took its dive, and you're finally starting to see it edge up a little bit. I think last week it edged up above 55 a barrel. I think it's at 57 or 58 right now for WTI, and for Brent I think it's around $62-63 a barrel as of last Friday. So why do I think this is the next big investment opportunity of the next 2-3 years? Well, I mean, right now, energy stocks and energy as a whole, around energy, all the stocks in this sector are really beat up and have been for the past 2 to 3 years. And why you're starting to see oil really edge up the last month or so is, demand and supply are finally starting to get back to equilibrium. Back in 2015, why we saw this huge dive in oil prices is because supply really outstripped demand by 2 to 3 million barrels of oil per day, and you're finally starting to see that get back to equilibrium. Into 2019 and 2020, we're actually going to see a pretty big imbalance of demand and supply, and we're going to see demand outstrip what supply can provide. And you can just see this by, OPEC comes out with these projections of what demand will be, what supply is, and into 2020, they're projecting about over 100 million barrels of oil consumed per day. And right now, I think we're around 95 to 97 million barrels of oil per day. So it's about 3 million above what we're at now. So, I mean, the question is, where will this extra 3 million barrels of oil per day be coming from? And, the past 2 to 3 years, we've had record low investment in, discovering new oil fields. So as soon as demand starts to pick up another 2 to 3 million barrels of oil per day, there's really going to be a question of where's that supply going to be coming from? Because we know that Venezuela, their oil market is and has been going down the tank. Probably within the next year they're not going to be producing much of any oil. OPEC is pretty much capped out at what they can produce. American drillers can pick up some of that excess slack in the supply, but they're limited too, because like I've said, we've had record low investment in finding new oil fields, and it takes time to develop oil fields and get the equipment in there. It just can't happen overnight. So this is why I think we're going to really see a pretty big shortage actually going into 2019 and 2020 in supply. I think going into next year, and like I said, into 2019 and 2020, we're really going to see oil stocks pick up and the price of oil per barrel go up. And I think it's pretty safe to say, 2020 we're going to see, $100+ per barrel of oil again. Now I'm going to show you guys some stocks that I think can capitalize on this increase in oil prices. One of probably the safest stock that I have to recommend, and it's not a stock, it's just like an ETF that kind of owns a basket of the oil producing stocks in America, and that is XOP. We're going to look at that one along with some other individual oil companies. So let's go ahead and take a look at some of these stocks and their charts. Okay, the first stock that I want to show you is not actually a stock, it's an ETF. And it is a SPDR S&P Oil and Gas Exploration ETF. So that means that they buy stocks in various oil and gas exploration companies. So, companies like Conoco, Chesapeake, Schlumberger, stocks like those is what they kind of pick up and invest into. So as you can see, bottomed around $28 a share, and right now it's trading around $35 a share on the money actually. So I mean, the reason I like this one is because it's a little bit more safe. They have a basket of companies that they invest in. So that means, if oil and gas does go off a cliff again, which, I don't think it's going to happen, but if it does, you're not going to have that individual security risk that you do with owning an individual security. So if you bought Chesapeake, which is, a pretty risky, highly levered oil and gas company, if oil and gas don't go up and goes down, there is a risk of bankruptcy with that company. So this, really protects yourself against that individual risk. That's why I really like this ETF. You don't have to worry about, individual security risk. So there is a small fee associated with this ETF. I just want to mention, and I think it's around 0.3%, which isn't bad. And they do actually offer a dividend of 0.8%, so that actually offsets that fee. Um, and this, it really gives an opportunity for pretty attractive share appreciation. Let me go to 10-year out chart. As you can see, like when oil and gas were around, I mean this is when it was only around $100 per barrel of oil, and it peaked around 84, and but I mean it traded around 60 to 65 to 70 uh, from really 2010 to 2013, and it bottomed around $22 per share. So, I mean, right here, you're still getting a pretty good deal, I think. At 35, if oil does go back up into the, 70 plus per barrel, you're really going to see this pop up. Back in '08, it looks like when oil was actually 150 a barrel, it really got up there for a little bit. It was trading around, $70 per share. So, I mean, this is one of my favorite plays on the, just purely oil speculation. I mean, as far as like individual stocks, there are a few that I'll show you real quick. Um, let's go with. So the first one that I want to show you is Conoco, and I do own this stock, just so you're aware. So it bottomed around 42. I mean, previously I think it was a little bit lower actually, but I mean it really rallied with this recent rally in crude oil prices. I mean, it topped up around $54 a share, and now it's at 50. And it offers a 2% dividend as well. So I'm happy with the dividend, as well as this really offers the chance for appreciation with oil appreciation as well. So yeah, let's go back to 10-year again for this one week. And yeah, so I mean, when oil was 100 a barrel, this was a 70 to $80 stock. So not only do you get paid to wait, for oil to go back up with that 2% dividend yield, you're keeping up with inflation with that 2%. You get a chance for, pretty attractive appreciation with oil. The year, and I'll show you a couple more stocks. This one is very highly levered. I would not recommend, going out and putting the farm on this stock. This is really a speculative play on oil and natural gas prices. But I mean, this company, there is that chance of bankruptcy with this company. But again, if you see oil go back up to $80 a barrel, you're really going to see this stock pop up in price. And they do own quite a bit of natural gas, actually. So this is a nat gas and oil play. Another one that I'm looking at is Anadarko. This is kind of like ConocoPhillips. There's a lot of oil and gas stocks out there. ExxonMobil, that would be the safest play of all of them. I think they're valued around 300 billion market cap, so they're not going to fluctuate too much. They do offer 3.5% dividend yield, so for some of the more conservative investors out there, this would be better suited for them. But again, you're not going to see as much share appreciation with this stock. Some other bigger ones that Schlumberger. This has really come down a lot actually, because they do own assets in Venezuela, and if you don't know, Venezuela has, they're having pretty big political turmoil there, and they're pulling all their assets out of Venezuela, and they're not going to get
any of their money back basically that they put into Venezuela. So that's why this one's struggling, but I think this does provide a opportunity actually. Let's go back to USO. This is a fun, but actually I would not recommend buying this at all because the value of this ETF actually depreciates because it trades on futures, so it does have a natural decay value. So, short term, this you can use this as a vehicle to capitalize on oil appreciation going up, but long term, this is not a good vehicle to use because it does have a natural decay value, just like options do. Some other like smaller stocks that are a little bit riskier will be Colorado Resources, and I think this has around 500 million market cap. So these smaller companies are a little bit riskier, but you do get that chance for greater share appreciation. Another one is McDermott, which doesn't actually explore and produce oil. They're more of a servicing company like Schlumberger is. Another one is Rig. This one is risky as well. The cost to produce offshore oil with rigs is pretty expensive. So if oil doesn't go up 70 plus a barrel, this is going to continue to struggle. Another stock that's out there is EOG. This is a little bit more conservative and safer of a play. So I mean, yeah, those are a few of the stocks that are out there. There's so much more that's out there, but the my favorite one is actually just the XOP ETF because that's the easiest thing. You don't have to worry about individual security risk. This just tracks kind of the broader oil and gas exploration and production side of things. I mean, as you can see, it got up kind of overheated up here and it's kind of cool off a little bit. So I think anywhere in this range, I'm going to look at buying.
So yeah, that's it all. That's all I have for today, guys. Like I said, I think this is really a pretty big opportunity. The past 2-3 years, oil prices have been just so depressed, and we're finally starting to see it creep back up and demand and supply get back into equilibrium. And I really do think that this is a pretty big opportunity because once you see oil creep back up into the 75 plus barrel per oil, you're really going to see some of these smaller oil companies really outperform the market. So that's all I have for this video, guys. Don't forget to subscribe, and I'll see you guys in the next one.